This is exactly why the crypto markets are going down. I'm going to go into the 3 key reasons why we're seeing the crypto markets tank and sell off across the board over the last week or so. G'day, my name is Ben Simpson from Collective Shift, coming to you from Miami, Florida, just finishing up at the Bitcoin Miami conference. And we're seeing a sharp sell-off in the Bitcoin and crypto markets over the last few days. And there's a few key reasons I'm going to get to in this video. It's 2017, I first got into crypto and have seen a lot of volatility in the crypto markets. And it's important in times like these to step back and see what else is going on, not only in the crypto markets, but in the wider macro markets, because it gives you a really good insight as to why crypto might be doing what it's doing. For me, I'm a longer term investor. I continue to dollar cost average, and I recommend for a lot of you at home that don't day trade to continue to dollar cost average. Nothing fundamental has changed here for Bitcoin. We're just seeing some short term volatility through a number of reasons we're seeing in the macro landscape at the moment. So let's get into it. We're seeing the overview of the market cap, seeing a lot of decline across the board, a lot of altcoins down 15, 10%, and Bitcoin over the last 24 hours is down around 6%. Over the last 7 days, Bitcoin and Ethereum down 15%. So quite a sharp sell-off. Why are we seeing that? If you take a step back and look at one of the biggest markets in the world, which is the equities, it's the stock market, the S&P 500, that is also seeing a sharp sell-off. So we've seen the S&P down 1.7%, the Dow Jones down 1.2%, and the NASDAQ down 2.2% over the last 24 hours, which is quite substantial in the stock market. That's, nothing in the crypto market, but the stock market is quite a lot. And the correlation for the past few months between Bitcoin and the S&P is nearly at an all-time high. The correlation between the two at the moment is 0.49, which is super, super tight compared to the correlation of what the both markets do. If we look at this chart here, we can see the Bitcoin and NASDAQ rolling 4-week correlation. So in the blue, you've got the NASDAQ, and the orange, you've got Bitcoin. You could nearly switch the two and change the price of both to see how closely traded the asset of Bitcoin and the index of the NASDAQ is. We've had this correlation for a long time now, and we won't see Bitcoin really come off on its own and separate from the NASDAQ and other stock markets for a little while yet. And the reason Bitcoin and the NASDAQ and equities trade so similarly is because a lot of the assets and equities in the NASDAQ are risk-on assets. A lot of macro investors, when the economy starts to decline or we see rising interest rates and potentially seeing an impending recession, which we'll touch on soon, is that people run to the hills when there is risky macro factors. And the first assets they sell is the risk-on assets. That Bitcoin, tech stocks, anything that is risk in their portfolio, they tend to sell and they keep their lower risk assets. So at this point in time, a lot of people still see Bitcoin as a risk on asset. For other people, they see Bitcoin as a world reserve currency, as actually something that is a hedge against inflation. And I think, again, that's just an education gap. A lot of people like myself see Bitcoin as something I'm going to continue to dollar cost average during adverse times, where other people see Bitcoin as a risky asset, which it is volatile. And for a lot of people, they do need to sell those during this period to preserve their wealth. Arthur Hayes, the BitMEX founder, has some really good points he made in an article recently about the stock market. So he's actually calling that Bitcoin might go to 30,000 and Ethereum to 2,500. And he's currently saying that there is an inability to recognize the clinical nature of markets and the inconvenient truth that is crypto is now moving in lockstep with market equities. He expects the NASDAQ to experience a significant pullback around 30 to 50%, and then also lead crypto assets like Bitcoin and Ethereum to drop in value alongside it. So you can see here the rising correlation of the Bitcoin versus the NASDAQ and the 90-day correlation. It is an all-time high. And he thinks that with this pullback of the NASDAQ over the next few months, Bitcoin will follow. History doesn't repeat, but it does rhyme. If we see the Federal Reserve continue to tighten up the monetary policy with the rising inflation rates, inflation is at an all-time high. And even the White House put out a press release about 5 hours ago saying that new inflation data will be extraordinarily elevated, meaning that the CPI inflation rate that came out recently of 8% could be much higher. And this is very scary because it basically means inflation will continue to increase, and the Fed soon potentially will raise their rates even more aggressively than they have in the past, which squeezes the amount of money in circulation because it becomes more expensive for banks and businesses to go and take out loans, which reduces the amount of money that people have to spend. And we've seen a huge rise in the stock market over the last few years, basically because the amount of money the government has printed, because the low interest rates, it's cheaper for people to loan money and push into the businesses, and it predominantly all goes into the stock market, which pushes it up. But now we're seeing a turn of events where inflation's running rampant, and the Fed have to raise their interest rates, meaning it's more expensive to loan out that money, which slows the circulation of money in the economy, which makes it harder for growth. And that's why we're seeing the stock market sell off and why Bitcoin continues to follow suit. Yeah, really, really crazy. So it's going to take a little while for Bitcoin potentially to part ways with the NASDAQ and equities. Will Clemente tweeted, we're also seeing that the 10-year yield on bonds are starting to break out after a multi-year decade. So bonds are typically something that's slower, safer investment, and people are starting to move towards those risk-off assets that are, less risky than your Bitcoin and tech stocks because of, the way the world's going in the moment. So as Will Clemente mentions here, the tech affecting Bitcoin, whether we agree with it or not, the market too appears to be viewing Bitcoin as a high risk play like tech, and trading at an increased correlation over the last month. So we continue to see Bitcoin correlated with those risk-on assets. And with the shaky macro conditions, I think for a lot of us, we are probably just sitting back. I'm not a trader. I'm sitting back and seeing the short-term volatility as nothing new. We've seen this over time and time again. I continue to dollar cost average. I guess in the short term, it does look pretty bearish with the macro conditions. And for traders here, unless you have a material edge, it's probably best to just step away while the market is in hard mode and continue just to find its feet. So, and DCA, dollar cost averages are gonna dollar cost average regardless. So a little bit of a short-term bearish viewpoint. That correlation is super correlated with the NASDAQ and tech stocks, and with the rising inflation rates, it is really scary out there in the real world. Like, things are getting more and more expensive. Being over in the US, I really have noticed it. With the rising interest rates, it's going to become more and more expensive for businesses to loan out money, and theoretically harder to grow. Employment will slow, businesses won't grow as fast, and there'll be less additional income for people to spend because things are going to get more expensive. Historically, people tend to protect their wealth. They save, they don't spend as much, which slows the growth. Stocks don't grow as much, businesses don't grow as much, and we see assets like tech stocks, Bitcoin potentially take a bit of an impact in the short term. Does it change anything in the long term? No, it doesn't. Continue to dollar cost average, continue to be super bullish on Bitcoin. Bitcoin is a fixed supply asset in my viewpoint, or my investment strategy, is that it's not a risk on asset, it's actually risk off because it's a hedge against inflation. We haven't got everyone at that point yet, so long term still super bullish, but in the short term, that's why we're going to see price potentially continue to go down in the short term. That's all for me today. If you have any questions or comments, please let me know what you think in the comments below. Do you agree with me? Do you not agree with me? Love to hear your thoughts. As always, coming to you every day with a quick wrap up of the Bitcoin and crypto ecosystem, helping you save time and staying ahead of the market. If you'd like to see some of our premium research, including our short-term, long-term NFT investment strategies, you can see all of our portfolio over at Collective Shift, and you can sign up for a 14-day free trial. That's all for me today, guys. Thanks very much. Bye for now.